Sanjiv, hi, good morning. Good to have you on the show as always. You think it's time, Sanjiv, to tread with caution a little bit? Given the January seasonality, it indicates to be so. Or you think we could see the December kind of momentum this month too?
Yeah, good morning, Aisha. I wish we could see the December momentum, but wishes cannot be horses. So there will be uncertainty, there will be little volatility, which is part and course of the markets after running up so sharply. We are of the view that take some chips off the mid cap, small cap, get into some of the large caps. Large caps are giving you comfort. There will be a lot of FI buying, by the way, and that will be more concentrated on large caps. Yesterday, you saw one single downgrade on Apple is down 6%. Nasdaq is down 250 points. And banks, actually regional banks and banks over there, the bank index is now one of the best performing indices. So I think banks are going to be more proxy. They are large cap, they are heavyweights. So just see a bit of take some money off the table on your mid cap, small cap portfolio. Don't get lured by the feeling of missed out, but be in the market. So we are more tilted towards the large cap banks, pharma, and so on.
So let's have your large cap list. What within pharmaceuticals would you recommend buying right now?
So we have an overweight on Dr. Reddy and Lupin. We are very, very bullish on Lupin, and we have been there from 750. In fact, yesterday also on your Hindi channel, my Lupin was my top pick. It was up 6% against the market. And in banks, Aisha market cap of ICICI Bank is now 6.89 lakh crore. So, another 150 lakh crore will mean that this will be another entrant into the $100 billion club. And I am looking at those milestones. I think ICICI is the perfect case for that. It will be the biggest beneficiary of CASA ratio increase, the low-cost deposit, and the sum of parts of businesses. So I am giving a thumbs up to ICICI as a entrant into the $100 billion club, which means you can see at least a 15% upside in this stock. And second would be Kotak. Arguably, the new helm is going to now lead from the front. They have all businesses which are firing on all cylinders, whether it's AMC, whether it's insurance, whether it's securities. And I think Kotak at this price gives me a lot of comfort. So two large caps over there, and Dr. Reddy and Lupin on the pharma side. We also have, as a disclosure, BPCL under our radar, which we think can be an outperformer.
Sanjiv, morning. Given that you're pretty bullish on Vodafone Idea, just wanted to get in your take on the recent news reports that have completely ruled out any investors for Vodafone Idea, particularly billionaire Elon Musk, given that there were some rumors floating around. So no discussion, no real peg coming in. Do you think that may have been fueling the stock up move and now things could change?
Yeah, good morning, Avan. I was bullish at 11 rupees. At 18.5, I was not bullish. I mean, we have booked across the board. We are not in the camp which will buy on rumors. The real value lay at 11 when you saw the ARPU strengthen, the government take a stake, and I reiterate, there will be infusion of capital by someone unknown or the promoter. I still think any decline will be a buying opportunity. But as a disclosure, 11 was a very, very fair point for us for our risk reward. At 18.5, there will be rumor mongering and there will be volatility. But the stock has more than doubled in the last 4 months. Please take that with a pinch of salt. And like I told you, that the real value lies in unbundling when you can, have the risk reward. I'll give you a similar example. At 9.5, 10 rupees, I gave JP, which was the most hated share. It yesterday hit a new high of 23.5. Now, we are not asking you to chase it over there. Do your homework, do your legwork, and when you get these opportunities, some of these small or large or debt-ridden companies can be huge outperformers. Right now, we have a hold on Vodafone, but we will wait for more news flow on the infusion of capital before taking a next move.
You to read the charts of both JP Associates as well as Vodafone Idea.
So Vodafone Idea, I think after that 2 or 3 days of strong, swift, sharp up move, I would actually believe that the stock may go into a couple of months of consolidation, because that's been the nature of the stock over the last many weeks and many months. We've seen the stock moving up Even prior, I think in the month of September, October, the stock was almost at 11 odd rupees, 11 and a half odd rupees, and from there the stock moved to 13 and a half to 14 in a matter of 3-4 days. And then what followed was 2 odd months of consolidation for the stock, where it retraced back most of the gains and then came back towards its key moving averages, the 50-day moving average particularly. I think from there the stock moved up higher. So again, it was a 3-day up move, strong up move for Vodafone Idea. My sense is that the stock would probably get into a couple of months of consolidation. So, anyone who's looking to buy the stock should wait out for a good amount of time-wise as well as a price-wise correction to try and chip in. JP Associate and JP Power, because I think both of these stocks, they tend to move in tandem. Both of these stocks are showing signs of a breakout for themselves. But again, I think, with the larger construct of the market, we'll need to see whether the market gets into a strong risk-on phase from here on, which I believe may not be the case. So I think having a smaller position size into these kind of breakout names could be a better strategy.
Let's look at SGX Nifty, please, or GIF Nifty. I need to get used to calling it as GIF Nifty now. SGX Nifty nahi hai, it is GIF Nifty now. Muscle memory sometimes just forces you to say SGX Nifty. Okay, 73 points lower, which means we will open at in and around 2160, 680, 21,670. Muresh, what is the support point? And if markets go to the support point, would you be a buyer today?
So the price point where there is a lot of support in the near term is closer to 21,400, 500. So would not be a buyer as soon because we've just corrected, say, 200 points from the top. So would wait for a risk reward entry point closer to the 50% of the retracement. So we've, say, gone up 800, 900 points and we go down 400 points closer to that 21,400 to 500 band. That's the price point I would like to initiate fresh positions.
Will you be a buyer if markets slip to the support point today?
So I think, according to me, the supports for the index is closer to 21,000, 21,200. So I'm not sure whether the index would probably scale down to those levels, but that's going to be a point where, in case if there is any kind of a steep correction or a sudden correction, I think one should try and take advantage of.
All right. In fact, let's focus in on the PSU space, and will the new year mean more cheer for these PSU stocks? Well, we spoke with some top market honchos, the likes of Hiren Ved, Ramesh Damani, and even S. Naren. Hear out what they had to say.
In PSU, again, one more thing that we look for is there a right to win? Most of the PSUs don't have any right to win. What they need is a general bullishness in the economy for the stocks to do well, which is what they have been doing. The day there is going to be some kind of a dip in the economy or any kind of a challenge, that is where these companies will suddenly, the men and the boys will get separated.
Longer term, the way their balance sheets have improved, I think general policy has been quite supportive to creating value in PSUs.
My personal feeling is that the leadership, as they keep telling, is very much intact with the public sector stocks. They probably have a largest way to go still, because typically if you see in the bull market leadership, the stocks go up 10x, 20x after some point. So I would remain invested in good quality businesses.
Look at the index, for example, the PSE index. Clearly, we have been much more positive on power within the PSU theme than other areas, because we felt that the power generating areas are still more reasonably valued compared to the other areas. And we have been more positive on the upstream areas in the PSU theme, because these were the two themes where the price to earnings was much more reasonable than many of the other PSUs.
Sanjiv, in terms of a portfolio allocation towards PSU specifically, should one take 15-20% profits off the table?
100%. But take it with a little bit of this thing that these most of the fund managers, particularly some of the PMSs, have been they said PSUs are taboo, and you cannot have a view which is inelastic. Go with the market. REC, PFC, NTPC, Coal India have gone up 3 times. What more do you want? So if you missed out, you are underperforming the indices. This is a time of where money has been made, Nikunj. So 35, nobody wanted to touch. NBCC at 91, 90, everyone falls in love. It is not that. It is just that the sheer ownership of some of these stocks can be frustrating. but time lasting. Now I definitely take some money off. And like I told you, I am very, very optimistic on the banks. I think their lending growth, their NIMs, their CASA, all are looking good. So stay with large cap. If ICICI is going to go into the $100 billion club, it gives me enough comfort. So is the Kotak. So is a smaller bank like DCB Bank. We are looking for those ideas. PSUs are the ones which are the flavor of the day, the high beta play, which make money on a daily basis. But here you must take some chips off the block.
And take the chips off the block and keep the money in banks or buy something else?
No, there is no such thing as called as sitting on cash. It is better to be in large cap banks. I still like three PSUs: IRCTC, Concor, and IEX. And we are invested in those as a disclosure. They have just started to perform. We are up about 20% on our portfolio on these, but we will not change the business outlook. Concor, IEX, and IRCTC have a superb business model. It will only gather stream. The earnings and the price performance will be a little bit of a laggard. But yes, do shift your portfolio. I mean, Aziz is looking very, very set to go to 450 this year. So is DCB Bank. Paytm is giving you an opportunity to get in now because I think most of the humdrum on exits is over. This stock is again headed to 1,000. So do your legwork, do your choosing, find your right RM, look at IFL Securities or whichever brokerage you follow. Because Nikunj, the cardinal principle is if you have a PMS or a mutual fund NAV, you are in the market. There will be a plethora of stocks rotation, but the fund manager keeps the rotation going. That's why you will be able to sit at maybe 24,000 also. But you will have to see even 19,000 maybe if the volatility persists. So the only mantra to creating wealth is staying invested. Let the fund manager do the sectoral shifts, or if you are smart enough to do it yourself.
All right, good to have you on board, Sanjiv. Thanks for joining in.